by Weber Securities' Matt Bryson. Matt, always good to check in with you. Thanks for the time this morning.
Thanks so much for having me.
Where do you think sentiment sits right now overall?
I think it's mixed. I say that in that I think that we're coming off reports that were relatively strong. You saw, of course, Marvell had a very good earnings number. At the same time, you had Nvidia give us what I thought were very good numbers, and the stock traded off. So I think it's been a decent earnings season, but expectations were high.
Are you getting clients asking whether or not some of the issues at, for example, an Intel are contagious?
No, I don't think so. I think with Intel, everyone views Intel's problems as very Intel specific. So it's not telling you much about the market. Rather, it's telling you about Intel's struggles with manufacturing, chip design, some of the execution issues that they've had. And part of the problem that Intel has is that a lot of these issues are expected to get resolved in the late 2025, 2026 timeframe as some of their new processes come out. So it's not even something that they can fix anytime in the near future.
So are you saying, Matt, nothing about the narrative, the very bullish narrative that's been driving these stocks all year long has really changed?
I don't think so. So I mean, I think there's been an AI trade that's been driving all of these stocks. We just had Nvidia come off a quarter where they grew by $4 billion sequentially. They guided for another roughly $2.5 billion in growth, almost all tied to AI. Each quarter, it seems like they've left themselves some upside. They are pretty much the proxy for AI. And so, no, I mean, I think at this point, there's not a whole lot of evidence that we're not continuing to see investment in AI. And I think you head into next year, there is a real potential that we start seeing AI in devices, which for the semis, that drives content in PCs, content in handsets. It's good for almost everyone.
Here we have the current stock market update for Nvidia Corporation, stock ticker NVDA. Before we begin, if you find these educational materials to be helpful in your trading, please remember to click the like and subscribe buttons so that other traders will be able to find this information more easily on the platform. So as we can see here, there wasn't much of an explanation in the prior clip. This was supposed to be a response to this recent crash in Nvidia share prices. He did sort of just give a longer term outlook here, kind of an uneventful response in my opinion. But as we can see here, the share price has now posted new near-term lows coming in at 109.39, which is a very extreme move lower. And we're currently looking at the 2-hour price chart here. And what we can see is that share prices have actually gapped lower to start the trading session. One question that was brought up there was whether or not there was an Intel contagion in the market. One story that seems to be missed there would be the Hindenburg report that was directed against Supermicro Computer as well. I do think that there are a couple of external factors here that are currently influencing prices, but for the most part, currently, whether or not this has a direct impact on Nvidia really remains to be seen. I don't see much of a reason to connect any of those stories here currently. In the prior video, what I explained was that I would be looking to establish short-term buy positions for Nvidia. Right around the 115.70 level. I've left all the prior chart markings here on this chart from the prior video, as we can see here. And the reason I chose this level was due to the fact that this was the 38.2% Fibonacci retracement of the ascending move from 90.69 to 131.26. So we can see that this was a fairly significant price zone. And I did have a buy order parked here. Now the share prices have sort of gapped lower here. I am adding to the position. I'm scaling into the position just above the 110 level, which is where we are currently. I scaled in, I believe, at 110.20. Currently, we're at 110.30, so we're still right around the same point here. Currently, the near-term low does come in at 109.39, and the main question going forward here will be whether or not share prices continue to head lower from this point. One factor that I do think that people need to watch here is the fact that the share price itself did fall below the 200 period exponential moving average. This was providing some support previously. We did see a kind of a drastic open here to start the trading day. And this does seem to be sort of a culmination of negative sentiment that seems to be surrounding the market, possibly the prospect that investors are starting to feel as though the technology space is overvalued. Maybe that it's not a quick enough return on investment for all of this AI money that's being spent. It does look as though this is damaging prices at the moment. But in my view, this can be viewed as a buying opportunity here. As I said, I did have an initial buy order for a short-term trade for Nvidia placed at 115.70. I scaled in. I believe the number was 110.20. So the current position is right around 112.50 as far as an average price goes. I don't expect to see prices move much lower from here. If we were to see a continued decline, I think that you could start to look at the 106.20 level as a potential area of support, roughly 106.10. This area would mark the 61.8% fib retracement of this prior trending move higher. So, as things currently stand, I do sort of have, in my analysis here, I do have sort of dueling Fibonacci measurements here. I've explained that in prior videos as well. I believe that these studies here sort of work in combination with one another. But at the moment, the more influential factor will be this most recent trending movement to the top side, because currently the question is whether or not Nvidia is going to be retracing this entire movement or not. If that were to occur, it would mean that share prices fall all the way to 90.70, which would be a very drastic price move, especially given the fact that the company did just release a very strong earnings report that was based on elevated expectations, and the company did manage to surpass most of what the market was expecting. I didn't really see many problems in the report. So it is quite surprising to see these share prices move in the downward direction, but this is also a fair lesson for the market in general. You quite often will see positive earnings reports that are just simply met by negative reactions, and it has a lot to do with what the market is currently expecting, how the market is responding to the information that it receives, broader sentiment. You do have some other stories that are going on in the market. There's the Intel story, which continues to sort of plague the technology space. And then in addition to that, you've got these accusations of accounting manipulation at Supermicro. This Supermicro CEO did recently release a statement saying that that they don't expect to see major revisions in the prior accounting figures. So, that remains to be seen whether or not that will continue to add pressure to the downside for these stocks. But price is king here, and we do have to ultimately look at price action itself. And there is no doubt about it that Nvidia is meeting some very serious selling pressure today to start the trading session. We did see this price gap here that presumably will need to be filled at some point, but we're still quite a ways from getting there. We would need to see a move back above 116 in order for that to occur. So, this gapping price movement to start the day is likely what caused a lot of this price volatility, and I think that it's catching some people by surprise. I think you can also attribute some of this selling pressure due to possibly trailing stops that are being hit for prior long positions, and that can sort of fuel momentum to the downside. So these are all factors to watch here in the trading session ahead. Here's the current market outlook for Nvidia Corporation, stock ticker NVDA. Our high-value trading strategies membership is currently available for a limited time for only $9.99 per month. These high-conviction investment strategies are characterized by superior risk-to-reward metrics that target massive, market-beating returns over time. Join now to outperform the market. Lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.